Okay, picture this. Imagine waking up tomorrow morning, grabbing your phone and seeing a single Bitcoin priced at $1 million. Or, I don't know, maybe even 10 million. Sounds absolutely crazy, right? Like, no way. An asset that's currently trading around $80,000 suddenly skyrocketing to 2 commas? But what if I told you that some of the sharpest minds on Wall Street and the absolute biggest players in finance aren't just hoping for this to happen. They are literally betting their entire reputations on it.
So, that is literally the million-dollar question we are investigating today. Is this astronomical valuation actually rooted in hard math and real market mechanics, or is it just pure, unfiltered hype? Well, we're going to break down the exact numbers, the specific timelines, and the real market catalysts that could actually push this digital asset into the stratosphere.
To really understand the massive stakes here, we have to start with the heavyweights. Take Michael Saylor, the guy famous for pioneering corporate adoption of Bitcoin. He argues that if the broader market truly grasped the underlying mechanics of this asset, all that crazy volatility, it would vanish instantly. And the price? It would gap up to $10 million per coin practically overnight. He basically believes that the difference between 100 grand and 10 million is just a knowledge gap that's waiting to be closed.
And you know, Saylor is definitely not alone on this extreme end of the spectrum. Billionaire investor Tim Draper ties Bitcoin's explosive rise directly to the decline of fiat currency. His perspective is that as the traditional dollar loses its purchasing power over time, trillions of dollars, yes, trillions, are logically going to flow right into Bitcoin as the ultimate global store of value. He sees it hitting 250,000, then 1 million, and eventually 10 million as global currencies start to really falter.
Now, you might be thinking, okay, that's just a couple of ultra-bullish tech billionaires. But watch what happens when we pull back and look at a wider cross-section of Wall Street and political insiders. A really fascinating consensus starts to emerge here. Cathie Wood, a highly respected Wall Street veteran, targets 1.5 million by 2030 because of massive new institutional involvement. Adam Back, a legendary cryptographer, who, by the way, some people actually suspect might be Satoshi Nakamoto, predicts 1 million by 2028. Matthew Siegel from Van Eck, which is a $200 billion asset manager, sees it happening in just the next half-decade. And Eric Trump, giving us a perspective from the political sphere, echoes that absolute conviction for a $1 million target around 2030 or 2031. Do you notice a pattern here? The timeline consensus is rapidly coalescing right around the late 2020s to early 2030s.
So we have an asset sitting roughly around the $80,000 mark today, and a whole parade of experts pointing to $1 million in the very near future. The psychological gap between 80,000 and 1 million feels, well, impossibly wide. But I'm going to let you in on a little secret. The actual mathematical effort required to bridge that gap, it's a fraction of what you might intuitively assume.
Let's dive right into Section 1, the surprising math behind 1 million, breaking down the required compound annual growth.
So how exactly does an asset actually climb that mountain? Well, if Bitcoin were to hit $1 million in just 5 years, it would need to compound at 65% every single year. Okay, that is a really steep climb. But stretch that out to a 10-year horizon, and the required annual growth rate drops to 28%. Stretch it out to 20 years, it only needs 13% annual growth. And over 30 years, just 9%.
Now, when you hear numbers like 28%, they sound massive, right? And to be fair, compared to traditional markets, they absolutely are. Over the past 10 years, gold in the S&P 500 compounded annually at an impressive 14%. But over that exact same decade, Bitcoin's actual compound annual growth rate was a staggering 68%.
So the absolutely crucial point here is this magic number, 28%. For Bitcoin to hit $1 million over the next decade, it only needs to compound at 28% annually. That means Bitcoin's performance could literally fall by more than half from its historical 68% growth rate, and it would still easily cross the $1 million finish line in 10 years. Mathematically speaking, it just has to double the historical returns of gold or the S&P 500.
But hey, math on a spreadsheet is one thing. Reality is a completely different beast. An asset doesn't just automatically grow by 28% a year because a spreadsheet says it should, right? It requires real capital, it requires massive structural market forces. So what specific market dynamics could actually fuel this continued aggressive growth? Like, who is actually bringing all this new money to the table?
Which brings us to Section 2, the 4 catalysts, the drivers of demand pushing Bitcoin to 2 commas.
To really solve the rest of this mystery, we need to examine the motives.
There are four distinct major market drivers that experts believe will supply this massive net new demand. First, seller exhaustion. Second, government reserves. Third, institutional capital. And fourth, retail demand. Let's break these down one by one.
Starting with Catalyst 1, seller exhaustion. Analyst Lynn Alden points out a really fascinating dynamic about the Bitcoin market. Unlike a traditional stock that can just suddenly jump on a surprise quarterly earnings report, Bitcoin is fundamentally money. It doesn't have earnings. Because of that, market bottoms tend to be long and flat. Alden's theory is that after a brutal bear market, all the fast money, the short-term speculators, they've completely exited. The people left holding the asset are the high-conviction, diamond-handed believers. There is simply a total lack of willing sellers. So any new demand hits a market where the supply is already locked up incredibly tight.
And building right on top of that constrained supply, we hit Catalyst 2. Listen to this wild observation from Coinbase CEO Brian Armstrong. We are currently witnessing the very first discussions of sovereign nations, including the United States, actually establishing strategic Bitcoin reserves. If the most powerful governments in the world begin hoarding this asset, it sends an undeniable signal. Armstrong predicts that the rest of the G20 nations would naturally be forced to follow suit just to avoid being left behind. And remember, there will only ever be 21 million Bitcoin in existence. Imagine the sheer price action when sovereign nations are actively competing to buy into a strictly capped supply.
Now let's add Catalyst 3 to the mix, institutional capital. Analyst Dylan LeClaire argues that a true hypervaluation, like reaching $5 or $10 million, doesn't just happen in a vacuum. It requires Wall Street. It requires the deep institutionalization of the asset. We are talking about tapping into a $200 trillion total addressable market globally. This is private credit, equity investments, senior debt, corporate treasuries, the whole shebang. With the recent launch of spot ETFs, we are just seeing the very tip of the iceberg as these massive pools of latent capital finally get the regulatory green light to participate.
And finally, Catalyst 4, retail demand. This is the ground-up pressure. Younger generations, millennials and Gen Z, are keenly aware of a really harsh macroeconomic reality. Governments are probably never going to stop printing fiat money. And continuous printing? That means the continuous devaluation of the dollar. To preserve their hard-earned wealth, individuals absolutely have to find safe haven assets. While real estate and gold have traditionally played this role, the younger generation has overwhelmingly chosen Bitcoin as their primary store of value.
All right, let's wrap this up in Section 3, the ultimate verdict. When will Bitcoin actually hit 2 commas?
So we have the historical math, and we have 4 incredibly powerful structural catalysts. So what's the final verdict here? Is it actually possible? Absolutely. The math clearly shows us that the required 28% compound annual growth over the next 10 years is remarkably reasonable when you compare it to the 68% growth it already achieved. Sure, the asset is going to remain incredibly volatile, but the underlying structural demand makes that $1 million target mathematically sound.
And honestly, this brilliantly illustrates the demographic destiny of the asset. Matthew Siegel grounds all these crazy astronomical numbers with a really perfect analogy. He compares Bitcoin to the video game industry. Think about it. 30 years ago, it was just kids playing video games in their basements. Today, those kids are adults, and even billionaires like Elon Musk are actively gaming. The point is, people don't outgrow it. They don't just quit. And similarly, the data shows that once someone truly adopts Bitcoin as their store of value, they don't quit it either. It is permanent, generational adoption.
We've looked at the expert predictions, we've crunched the math, and we've analyzed the catalysts. The evidence strongly points to a massive paradigm shift happening right in front of our eyes over the next decade. But honestly, the real mystery isn't just if it happens anymore, it's when. Based on that 28% growth requirement and the massive drivers we just broke down, I want to hear from you.
Drop your timeline in the comments down below. Are you in the 2028 camp, the 2030 camp, or maybe a bit further out? If seeing the historical math and that 28% requirement absolutely blew your mind today, hit the like button on this explainer right now. And hey, speaking of hitting 1 million, we are on a mission to hit our own massive target of 1 million subscribers. Every single one of you who hits subscribe right now helps us get there, and it ensures you won't miss our next deep dive. Thanks so much for watching, and stay curious.